Hello and welcome to another update video about DOT. Polkadot chart continues to be in this sideways range, but we've obviously had this decline on Friday, which was quite a sharp decline. And as I mentioned in the last video, as long as we stay below that B wave top here, which was the Wednesday high, the 5th of June, at around $7.35. Yeah, the forecast is still, well, let's say we wouldn't have any sign that we have broken out to the upside or anything. Okay, so that is the next significant swing high that needs to be taken out in order to suggest to us that we are starting to move up basically. At the moment, we are ranging. We are ranging and we're moving in a support area. When we zoom out, you can see that actually we have our 5-wave pattern to the upside into the March highs around the 14th of March. That was the swing high that was formed around $12, just below $12 actually. It is considered a 5-wave pattern to the upside that we've been tracking there. And now obviously this correction, this pullback into a support zone. And the only thing the only thing I want to say about that really is that when you look at this structure, there is no clear sign that we've bottomed already. Yep, we've dipped into our support zone. The move down looks incomplete. It can be counted complete if I consider a WXY structure. You see that here, WXY, that is a valid corrective pattern, but it can extend easily into a WXY XZ pattern. And that's what I'm tracking here at the moment, primarily because the market hasn't given me any sign that we've broken out to the upside. Instead, I've even tracked a micro support level recently, which was broken, which gave us the signal that the market rather is favoring one more low here. But obviously it's this up and down constantly in this sideways range. So there is not really any clear edge here at the moment. I can only share with you, when we're in these ranges and you try to trade these ranges, just be a bit careful. It needs to follow, it needs to be a setup that respects your trading plan. There's typically not a great edge in these trading ranges, in these sideways ranges. You could rather put a grid bot on. Okay, if you try to trade this aggressively, do something else instead maybe, unless you really make money here, but most people won't. The edge is low, okay? So it's like whipsaw price action. You get caught out if you trade this too aggressively. Trading out of boredom can destroy trading careers. It really is the case. And the best setups typically come when we're close to invalidation points, when we're deep in support areas, good for a long trade. When we're deep in resistance areas, good for short trades. But this is just a sideways range. The market hasn't really told us which side is clearly winning. So when we make a higher high and higher low series, I mean, you can roll up your stops. As long as we are not doing that, however, the risk is high for one more low. And try not to act impulsively here or out of boredom. Do something else instead. It might be cheaper. It might be cheaper, even if it's just paper trading. It sounds maybe a bit silly, but it is what it is. Because in these ranges, if you're not making money, then a dollar saved is basically a dollar earned, right? It's all about preserving your capital. So you can come back the next day. Because that's essentially all you have for trading, right? Your capital. Looking at the structure then, any break below the green line here, there's basically these previous swing lows, right? So if we break below $6 pretty much, then that would give us a signal that we're heading down into this lower support zone. And it might just need one more low. It really might just need one more low to maybe 592, 566, 550. These are the next downside targets from where we could then recover. And then initial resistance is between $6.48 and $6.79. That's the nearest resistance. In case the C wave down is an ending diagonal, I added the 61.8 retracement. But that is really only a break above it, will only be an initial signal that the immediate downside move is likely not getting the follow through for one more low. But it doesn't mean that we're breaking out to the upside of the range. So further evidence would be needed. For example, a break above the B wave high at $7.30, and then the levels that I've mentioned for the last couple of weeks here, they need to be broken at $7.78. And only then we can say, okay, we are breaking out of the range to the upside. It's time to look for the price to rally in a third wave into this upper target range there. That's my update about DOT. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Also make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.